Hi there, welcome to Kneppy Invest and welcome to August 19, 2025. Time is currently 2:54 p.m. So we have about 1 hour and 15 minutes left of trading today on an interesting day. On an interesting day when two of the biggest companies on the ASX reported, two of the three biggest companies, and one of those reports was really disappointing to the market. And that is the main reason why we have seen a fair bit of weakness in our in the ASX today. ASX 200 down 0.78%, XTL, ASX 20 down about 1%, healthcare down about 8 to 9%, all because of CSL. Their results disappointed the market, and the share price of that company has plunged. The other big company that did release results today, BHP, share price is relatively higher, I think, up 1.59%. Okay, so before we have a look at the ASX today, I just want to mention Kaili Resources because I did read something really interesting in regards to one of the directors who did something 2 weeks ago, and he's become a very rich, or possibly a very rich man because of that. Maybe if he sold some shares yesterday, he would become a very rich man. And then we'll have a look at the ASX today, and then we'll have a look at the top 5 stocks of the day. All companies in the top 5 release results today. And the share price has gone up for a few of those companies, gone down for a few of those companies. A few other interesting announcements today, but nothing overwhelmingly that would push out these 5 companies out of the top 5. And then on the chart of the day, I haven't decided what the chart of the day is going to be. I've just thought of one. Chart of the day will be a company that actually released results today, didn't quite get in top 5 stocks, but the share price looked like it was going to go higher by a fair bit on open, and that is Judo Capital. The chart was looking interesting the other day when I looked at it. Okay, so before we have a look at the ASX today, I just want to go talk about Kaili Resources, still in a trading halt, I believe. They did receive another price query from the ASX. Yep, still in a trading halt. So they did receive 2 queries from the ASX yesterday. In fact, after I finished talking, the share price went from $3.18 down to $1.08. And I just mentioned, I'm pretty sure I mentioned during that video yesterday that eventually the selling will come and the share price will drop. Maybe not that quickly and by that much. So share price dropped 67% in 30 minutes or so. But what I did read this morning was that that the director, one of the directors, what did I read? One of the directors got a fair bit of shares the other day. So yeah, this one here, Zhang Zhongyang got 75 million shares, fully paid ordinary shares. I forget exactly what reason. Was it a loan or something? Yeah, some sort of loan. I forget exactly why. But yeah, 75 million shares for this loan. So at the peak yesterday, the value of these shares was about $225 million. Now, before the share price started to rising, we're talking about the value of these shares being a few million. So let's hope Mr. Yang did not sell his shares yesterday, because that would look really suspicious if the share price suddenly exploded and he offloaded all his shares. But anyway, so the director 2 weeks ago got 75 million shares for some reason. I forget exactly what. For some reason, I thought it was a sell. I thought it was because of a loan or something. Anyway, that's that company not trading right now. But a really interesting story on the ASX. You can see the 52-week low, 0.6 cents, 52-week high, $3.18. And someone bought some shares at $3.18 because of FOMO. That's it. And they lost 67% of their holding. The value anyway, not the holding itself. Okay, now onto the ASX today. And yeah, we've had a negative day. A flat lead-in from Wall Street. What can you say? NASDAQ was flat, up maybe a little bit, 0.01%. Dow Jones down a little bit. Asian markets relatively flat today, nothing really exciting. The American futures down slightly. And because of all that, I would surmise that the main reason our market is down today is because of CSL. And in fact, you can see that if we have when we have a look at the best performing sectors or the worst performing sectors. So a few sectors have done well: IT, telecommunications, and there is healthcare down 8.5%. 0.36%. Now, energy industrials have had a bad day as well, both down by more than 1%. In fact, energy down 2%. So maybe uranium, oil is down today. I don't know. Haven't really looked that deeply into commodities, but that's the main reason we've had a bad day today, relative or comparatively speaking, is because of CSL. And then gold down a little bit, and then ASX 20 down 1.06%. Funny enough, if you have a look at the ASX 20, 50, 100, 200, and 300, you notice that the more companies within that particular indice, the less that indice has dropped. So ASX 200 or 20 down 1.1%, ASX 50 down 0.9, ASX 100 down 0.8, ASX 200 down 0.78, ASX 300 down 0.75, all ordinaries down 0.72, and small caps down 0.24. So it just shows you the power that CSL has had on the market today. And if you have a look at the ASX 20, I would not be surprised if like 8 companies are up. Let's have a look. Oh, in fact, 9 companies. There you go. 9 companies up, 11 down. It just shows you the power of CSL today. So let's have a look to see how much CSL had dropped 20 minutes ago, because this is 20-minute delayed. 16%. I was thinking maybe 14 to 15%, but 16%. And the share price has dropped below $230, which makes this particular comment from Fishbowl relevant. After today's CSL results, there is a chance it can touch $230. You think it's a good buying opportunity, or wait for uncertainties to settle down? Oh, yeah, that's easy, because I've been saying that below 240 is pretty good buying for CSL. I am not so sure anymore. Not so sure. I think there is potential more downside to come, just because we're going to see broker downgrades more than likely, and that could push the share price down. But I wouldn't be surprised to see a bit of a jump now. We're going to see a little bit of a rally, because people now see the share price well below 240. This is a great time to buy. Now, it's going to be interesting when we have a look at CSL's chart later in the video when I talk about CSL, because it is easily the stock of the day. And also a negative day for Woodside. They released results today. I don't really look at Woodside Energy's results. It's just like one of those companies where it's more of a training stock for me, and I don't really care about the results. Otherwise, nothing much to talk about there. And the best performing company is BHP. There you go. And the banks, some of the banks. In fact, all the banks have had a good day. Okay, now on to the top 5 stocks. No, I always do this. Now on to the top performing companies today, top gainers of the day. Magnetite Mines up 1,100%. Is that right? Is this happening again? Is this happening again? I did not expect to talk about this company, although 83.1%. What's happening there? There's MTGTRG, 4.8 cents. This says 13 cents. Okay, that's something completely different. MGT. Oh, right. Application. Oh, okay. Up 950%. Some sort of, is this a capital raising or something? I have no idea. MGT. Sometimes you just see this happening when there's a capital raising. There we go. Yeah, some sort of capital raising. And you can actually trade those your rights on the ASX, and you can see it's up a fair bit. Magnetite. I wasn't going to talk about magnetite, but here we are. Another rare earths company, rare earths mineralization, identified at Ironback Hill. A lot of FOMO, maybe not FOMO, but a lot of interest in rare earths right now, and you can actually see that just by Linus Rare Earths chart. I was very close to getting in this one, and I just did not hit the buy trigger. But this sort of price action, I do get a little bit nervous. If I was holding this company, I'd be thinking eventually you're going to see some selling coming in. So share price is starting to go exponential, and I get nervous when I see that. Very nervous, maybe not very nervous, but for me that is particularly if we see share price starting to gap up. We saw it already once 3 days ago, and if we see some more gap ups, that is telling me that there's a lot of FOMO happening with a company or a sector, and typically that is a good sign to get out. But I can't tell you what to do. If you're owning Linus Rare Earths, maybe this is a long-term hold for you. But anyway, the company I was going to talk about is Itech Minerals. Share price up 123.53% on pretty big turnover. Oh, there's magnetite, just below it. The magnetite mines RG. Itech Minerals up 100%. So let's look at this one. A company I've never heard of before. I wonder if this has to deal with tech minerals. Oh, yeah, that's right. That's right. So the company share price did increase yesterday on big volume. So 17% up on really big volume. 5.8 million shares doesn't seem like high volume, but compare it to the previous day, 113 shares traded. And if you have a compare how much trading it was before that, very rarely did the day's volume get above a million shares. And yesterday it was 5.8 million. So I think they received a price query in because of that. Share price actually got to a high of 4 cents, closed at 3.4 cents. So loose lips. Information got loose. Information got loose. And let's have a look to see what they said if this opens up. So they did release high-grade antimony identified at Reynolds range. Not the sort of announcement I'm going to be absolutely drawn to because I can't read antimony grades or drilling results. But let's see what they wrote in their response, because they would have answered question 1 with a yes, and then they would have said, we've just released the announcement. So let's have a look. So they did answer question 1 with a yes. The company has prepared an announcement related to a new high-grade antimony results at its Reynolds Range project in Northern Territory. The announcement includes price-sensitive results for release to the ASX. I was just wondering if there's going to be any investigation. Who was buying yesterday? Who was buying yesterday? But there won't be any investigation. We know that. This just happens all the time, and there's no investigations. Anyway, so that's why the share price is up, because of high-grade antimony identified at Reynolds range. Let's have a look at the chart for this one. By the way, their logo looked familiar to me. So I might have looked at this company in the past. Itech Minerals. Oh, look at that chart. Definitely wouldn't have looked at this company recently because this chart looks terrible. Maybe when the share price went on a run back in July 2024. But interesting chart. And then consider volume yesterday. Wow, that's so dodgy. So dodgy. What else do we have here? I was thinking of looking at Argent Biopharma, but I went nope. What else? Nothing really else to discuss here. Let's have a look at the top gainers by market cap. Seek, top 5. ARB Corporation, not in the top 5, but close. In fact, I'm a little bit confused why the share price of ARB is higher, because their results were actually below expectations, but they did announce a special dividend. And I'm a little bit cynical, thinking they announced a special dividend because they thought the share price was going to collapse. Maybe not collapse, but drop, because they did not meet expectations. SIG Global is in my top 5, up 7.8%. McMahon, close, up 9.72%. I had a lot of choices here, I just didn't know which ones to choose. Okay, so now on to the top losers, and there's CSL. It's not often you see that big of a company among the top losers by percentage change. And look at that turnover. Okay, so this could be interesting times for CSL and CSL shareholders. Okay, I'm really glad I did not buy it recently below 240. However, maybe in 5 years, I'll be ruining that mistake, if it's a mistake. I shouldn't say mistake, ruining that decision if the share price is like quadruple from where it is now. Okay, nothing else of note there. Oh, that's right. Okay, biggest losers by market cap. Lendlease was up yesterday, down. Reliance Worldwide Corporation, down significantly. Top 5 stocks. HMC Capital, very close to getting my top 5 stocks, but I put it as my worst stock of the day, or in my worst gainers of the day, just so I include another bad company. And that's it. So let's just discuss HMC Capital. Now, we looked and I talked about Digico, whatever it's called, and thankfully, who said it? Yeah, Justin Kraber mentioned that in TradingView, my search criteria was just on stocks, which I don't usually have. So if you go into simple search, yesterday I was on stocks. Typically, I have it on all. I don't know why I was on stocks, but thank you for that, Justin Kramer, because I had no idea why I couldn't find Digico. But anyway, I'm pretty sure Digico was spun out of HMC Capital, And this is the first time I've looked at HMC, maybe. I can't remember looking at this company in the past. So it is like an asset manager, that sort of thing. Share price down 9.29%. Not sure exactly why the share price is down. We'll have a look at Capital Brief in a second. That might explain it. I don't really follow this company all too closely. I was thinking maybe a few weeks ago that there might be some value in this company. Not sure now. I had a look at their presentation. I just want to see what this company invests in or what they manage. And I was a little bit surprised. They are way more diversified than what I thought they were. Now, they are focused on real estate. And they had a nice little, in fact, this whole presentation was very similar than Digico's. Anyway, here we go. This is what I was interested in. Economic flywheel. So, yeah, real estate. We're talking about healthcare co, a few REITs within that, HMC Capital, unlisted healthcare and life sciences. They also have capital solutions, warehousing, underwriting, strategic stakes, private credit, HM Capital, private credit, digital infrastructure, there's DigiCo, whatever it's called, StratCap, whatever that is, energy transition, Neon with 2 E's, and Store Energy, and also private equity. So Sigma Healthcare, Lifestyle Communities, Baby Bunting, Ingenia, and Lend-Lease. I don't like a few of those companies, but they're more diversified than what I thought they would be, just for the very fact that they have private equity. I did know they were into energy transition, but a little bit more diversified. But in saying all that, their private equity is not big. So the main driving force of this company is real estate. So assets under management, 9.9 billion real estate, 5.3 billion digital infrastructure, 1 billion energy transition, $1.9 billion private equity, and only 600 million in private equity. Did I say private credit? $1.9 billion in private credit, 600 million in private equity. So it's a small portion of the company, but it's still a little bit of surprise. Other than that, I didn't really take much out of this, to be honest with you. I was more interested to see how the market reacted. And of course, the share price is down almost 10%. So obviously, the market didn't like something. Now, sometimes this does help. HMC, I have to see if it's here. So HMC Capital shares dive on financial year 26 growth target. Oh, I actually did read this. I did read it, and it sort of makes sense. So the company was targeting a pre-tax earnings of 40 cents per share in financial year 26. They achieved 56 cents per share in financial year 25. So that was a fair bit lower than this year. So I did not have a look at or see that in their announcements, but lowering in their, maybe not guidance, but earnings for financial year 26 sort of does explain why the share price might be down, particularly if that was a bit of a surprise. So let's have a look at the chart for this one. And the chart does not look good. Chart does not look good. In fact, it looks horrendous. Share price has dropped from $13 to $3 in a fairly short period of time. The whole reason share price went to $13 was a lot of hype in data centers. That hype fell away. They released the results in February. Share price popped up on that day, but then look at the drop. And I thought at around about 350 was a nice little support level. You can see the share price started sort of going sideways at that level. And the reason that was a nice little support level was because that was the lows back in March 2023. Anyway, share price is now at a multi-year low and has broken below that 350 support level. So who knows how much lower the share price can go. So I thought there was some value here, but maybe not anymore. And to be honest with you, the daily chart looks horrendous. Okay, I think that's it. Anything else there? No, that's it. So on to the top 5 stocks of the day. We'll start off with the small cap. So this is what I want to do from now on. I want to include at least one small company in the top 5 stocks during reporting season, because I'll be honest with you, sometimes I'm looking more forward to the small caps or the mid caps reporting than the large companies, because there's a lot of brokers or a lot of analysis who follow the bigger companies. So typically you won't see much movement in the share price apart from CSL. So I definitely look forward to the small caps. And XRF is a company I've owned in the past, and I did sell completely, which could be a mistake. I should have taken profits. I should have sold half and then maintained a different, another holding. I should have maintained the rest of my holding. Anyway, share price down 4%. One of the reasons I did sell when they released their half-year results was because a lack of revenue growth. So that was a slight red flag I did have, and then I just sold out. So they did announce their results today. And the first thing that struck me is if you have a look at this particular media release, you notice they just mentioned revenue, but no change in revenue from last year. And I'm not sure if that was deliberate. I'm not sure. But the very fact they had no change in revenue, but when they talked about profit, up 17%. So no change in revenue, no mention of any change in revenue, net profit up 17%. And I was wondering if revenue actually did drop. June quarter four, profit before tax of 4.3 and revenue of 16.8. That's pretty nice. So a nice June quarter, and cash inflows 10.1 million, fully franked dividend of 4.5 cents per share. So of course I had to look at their results. And indeed, revenue did drop. But I sort of expected that based off their half-year report. I was thinking, I'm not sure if revenue will increase this year. And that is one thing I'm looking for. Now, I do believe that this company has the potential to be a high-quality company in the future. So I'd be willing to buy shares in this company to hold for the long term just because of that thought. But there is a bit of cyclicality to this company because they are sort of a mining services, or in that area anyway. And the revenue actually did drop, went from above 60 million to below 60 million. That's not necessarily a red flag, because they did increase their margins. In fact, the gross profit margins actually did increase by a little bit. That's why they were more profitable this particular year. So even though revenue did drop, it's not necessarily a massive red flag, but it was something to be aware of. Other than that, equity, nice, up to $60 million. And if you have a look at the cash flow, $10 million cash flow, and they were free cash flow positive by about $8 million. Now, in saying all that, if you have a look at the valuation of this company, it's about, it's $300 million. So $300 million on, so it's 30 times operating cash flow. And if you go back to the profit, we're talking about, it's about 30 times profit. So definitely not cheap, but definitely a company maybe to put on your watch list. Okay, so let's have a look at the chart for XRF. And the share price had been on a bit of a run recently, if I remember correctly. Yeah, it was on a nice little run. And yeah, there's me buying $1.05 quite a few years ago, and then I sold out, who knows when. It was up here somewhere. It was after results. So this would have been in February or March I sold out. Probably in March. So probably about $1.90 I sold. Anyway, so share price, looked like a bit of a double top. Bit of a double top there. Anyway, chart doesn't look half bad. Particularly, I think the weekly chart probably looks really good. In fact, the weekly chart might be looking, this definitely has the looks of a high quality company. Share price has been well above the 200-week moving average since 2020. Before that, not much happening. So this company has really taken off since COVID-19. And the chart since then looks good. Okay, so that's XRF Scientific. Coming in at number 4, we have SRG Global. I suppose this is a small cap. Yeah, SRG Global, 7.8% higher. I had a look at these results and went, that's pretty good. It's pretty good. We'll just have a look at the media release. Everything's growing nicely. It's another stellar performer in this space. We had McMahon in this space release really good results. Monodelphous in this space released really good results. And that is the theme I think we are seeing right now. These sort of companies are releasing really good results. We're talking about mining services and that sort of thing. Anyway, so revenue up 24%, EBITDA up 29%, and not only that, they had some guidance for financial year 26 and 10% EBITDA growth on financial year 25. So they do expect growth to continue into next year. So another nice year for SRG. The only thing was, I'm not sure exactly what their expectations were. And sometimes you can go back if you don't really know, or you know what you can do. I just thought of that. I can't forget this. What you could do is go to Morgan's calendar, and SRG is in the list today. Yes, it is. So SRG is one of the companies in Morgan's release calendar. And what you could do is just have a look at Morgan's, or just to have a look at the, where is it? The expectations. Now, these financial summary expectations or forecasts are Yeah, they're Morgan's numbers, not consensus. But difference between Morgan's and consensus, not that far off. So the consensus revenue for this year was 1.3 billion. And I suppose you could do this. Just have a look at their results. So revenue came in at 1.32 billion, which was to consensus. EBITDA 127 and profit not 58. EBITDA 127 million. Profit 61 million. So profit was a little bit higher than expected. Came in at 61 million and the consensus was 58 million. So we have a beat. The other thing is they put out guidance for EBITDA and EBITDA growth at 10%. And in fact, we can see what consensus was for next year and EBITDA, yeah, growing about 10%. Yeah, about 10%. So they're expecting consensus EBITDA to grow from 127 million to 139 million. So I do think it's maybe just a bit of an NPAT beat. I'm not sure this would have been mentioned in Capital Brief. I doubt it. It's probably too small. I'd be shocked. I'd be shocked if it's mentioned here. Yeah, I'd be shocked. Again, SRG has a market cap. Is it 500 million by now? Oh, 1 billion. Okay, well off. Yeah, that's right. Yeah, the share price has increased a fair bit. So this is actually a company I bought a few years ago. Then I sold, and I actually participated in one of the capital raisings because the share price was well above the capital raising price, and then I just completely sold out. I shouldn't have done that. Anyway, let's have a look at the chart. Okay, so this is the daily chart for SRG Global, and it's a beautiful chart. Beautiful chart. In fact, the share price moved into uptrend back in February 2024. So we're talking about 18 months ago. Share price at that point was 68 cents. So the share price has more than doubled since then. A little bit of weakness back in April, March, April. The one thing I do remember is when they released results in February, the market had a bit of a hissy fit on that day. Share price opened up higher and then dropped during the day. So that seems like that was a bit of a catalyst for a little bit of a shift in sentiment. And the share price actually did drop after that. And the market was wrong. The market got a little bit too stupid on that day. Now, I almost bought on there a little bit of an upgrade, I think. It was the 25th of June. And she said share price just drifting lower. That would have been a nice day to buy. But share price getting above $1.75 would be a really nice price. So I'm going to say if the share price gets above $70.75, that would be a breakout for this company. And by the way, the weekly chart, I think is going to look pretty good. Although if you go back through time, and I don't know if this has been SRG Global the whole time, this is the chart of more like a cyclical company. At times, cycle looks good, share price goes on runs, but maybe not a long-term hold. Okay, coming in at number 3, we have Reliance Worldwide Corporation. Share price down 7.61%. Wasn't really sure what to take away from this one. We do have Reliance Worldwide in the Morgan's calendar. I wasn't really sure what to take away from this one. So let's just have a look at their results here. Now, my first thoughts were having a look at their net sales up a little bit and adjusted EBITDA. I don't think this is the one I looked at initially. For some reason, I have a feeling I must have looked at their Appendix 4E because the first thing I saw was profit up, was it 14%? And I was like, hey, if profit is up 14%, wow, this is a really good year for Reliance Worldwide. Here, yeah, I looked at this one first. So revenue up 5.5% and net profit up 13.5%. And that was it. And then they had this nice little table. Yep, reported net profit up 13.5%, but adjusted net profit, the underlying net profit, the real profit up 0.5%. And there have been a couple of one-offs in the last 2 years, which is why the profit is up the reported profit up 13.5%. So as soon as I saw that, I went, oh, not quite as good. In fact, sales up 5.5% and the real profit, the underlying profit, flat. Anyway, so not as good a year as I thought maybe on first looks. Anyway, so that's really all I need to talk about. So not much going on with Reliance Worldwide, but in saying all that, let's just have a look at the guidance or the consensus. So the consensus was revenue of 1.311 billion, 1.311 billion. That was a slight beat, very slight beat. We also had NPAT of 145 and earnings per share of 18.6. So relatively, actually, we don't know if it's relatively flat. 145. This was a slight beat as well. Slight beat as well. The adjusted net profit, that is, not the, adjusted net profit, which is the real profit. Slight beat. So just comparing to consensus, a slight beat. I'm wondering if they did release any sort of outlook or trading, trading update, and maybe that was a little bit disappointing. I don't know. I can't remember reading anything of that nature. Here it is, trading outlook. Oh, the outlook for each of their key markets remains uncertain. I did read this, they just said uncertainty. And typically when a company doesn't release any numbers and they have this wishy-washy sort of commentary, I don't really take notice to it. But I'm wondering if that sort of commentary will lead to a little bit of negativity in the market. I'm just wondering that right now. Do they have any mention here? No, nothing there. Okay, so sometimes Morgans will update this, but they haven't yet. Let's just have a look to see if Reliance is in this list of capital wealth. It is. Reliance Worldwide shares drop on uncertain outlook. Okay, so that's what they're saying. So even though this was a beat, so UBS analysis, Nathan Riley said Reliance shares have underperformed during the year to date due to tariffs and US housing. Okay. The company's cautious outlook commentary today reflected the more subdued US housing repair. Okay. So I think that's what it is. It's just a little bit uncertainty, and the market doesn't like that. Okay, now let's have a look at the chart for Reliance Worldwide. I'm wondering if this company might be looking a little bit cheap. I don't think so, though. What I might do is, what's the P/E ratio? 18.83. No. If it was like 13 or 12, I'd be interested. Now, this is the weekly chart. So tell me, is this a high-quality company just by looking at this weekly chart that goes back to 2016? So we're talking about almost 10 years of history here. And yeah, this is not a good chart if you're talking about a high-quality company. And it's the sort of company that looks like it just trades in a range. And you buy shares in this company if the share price falls, say, below 350, and then you sell if the share price gets above 550. That's what it seems like over the last 9 years. And the daily chart, nothing in the daily chart either, which is no surprise. All right, coming in at number 2, we have SEG. A bit of surprise, a little bit of surprise. Now, I'm not talking about the share price reaction or the market reaction. I'm talking about not the results, the outlook. It was the outlook that surprised me. In fact, when I saw their numbers, I was like, ew. And then I saw their outlook and I went, whoa, hello, SEG. Ooh, I've seeked you up my whole life and finally I found you. Anyway, so the numbers were bad. So key financials, and by the way, SEEK has really disappointed me the last few years. Very little growth, if any growth at all. So revenue up 1%. Expenditure down 2%. So maybe a little bit increase in profit. EBITDA down 2%. Adjusted profit down 13%. But full year dividend up 31%. Interesting. So nothing happening. Now, free cash flow growth of 41%. That's interesting. But when you talk about revenue, EBITDA, profit, just not going anywhere. So initially I thought, oh, this might drop, depending if this was a little bit worse than expected. But then, guidance. So revenue, expecting revenue to be between 1.15 and 1.25. Last year, well, this year, the revenue was just below 1.1. So nice little growth there in revenue, but not significantly. But EBITDA between 510 and 550. EBITDA this year was 459. I was thinking, oh, that's above 10% growth. And profit, adjusted profit, 155 million. And their adjusted profit, 190 to 220 million. I was thinking, that's actually really good growth. So when I looked at EBITDA and adjusted profit, I went, wait on, we're talking about pretty significant growth in 2026, or they had a bit of commentary there. So delivery of the midpoints of these guidance ranges will result in 10% revenue growth, 15% EBITDA growth, and 32% adjusted profit growth. For a company that has done nothing over the last few years, I went, hold on, that is a pretty good outlook. Now, the question is, can they achieve this? Because if they can't, but if they can, wow. So my thoughts on these results change from, and all because of guidance. So it wasn't the results, it was the guidance. And I'm pretty sure that is why the market has just gone, we like these results. So let's have a look, see what analysis have said. 6 shares rally after swing to full-year profit. So UBS analysis, Tim Plum said positive momentum in Asia was a highlight of 6 results. Well, I didn't even look at that. While the platform's performance in Australia was an ongoing demonstration of the strength of the business, I think it's just the guidance. An E&P analysis, Ensho Raykovsky noted that the composition of 6 financial year 26 guidance is arguably better than expected. Thank you, Ensho, whatever your name is, with the company targeting stable volumes and 10% yield growth. I think that's why the share price is up, is just their guidance. Let's have a look at the chart for SEG. There's a chance this is looking pretty good. Oh, yes. In fact, the share price sort of broke out back in May. This is looking much better. But you can see, just by the chart, you can see this company hasn't really done anything over the last 4 years. Anyway, and if you have a look at the weekly charts, there was a nice growth period between 2012 and 2022. Now it's going sideways, and maybe this is the breakout for SEG. Maybe now is the time to get excited, particularly around that guidance. Okay, now to CSL, the stock of the day by far. Share price down 16.6% at $226. Seems like the share price just keeps on dropping. Open at 245, high is 257, and low 225. So share price looks like it's going to close near the low of the day, which is not good. Okay, a few things here. So I am a shareholder of CSL. So this is a sort of announcement or results I'm going to pay a little bit more attention to. The first thing I saw here, apart from the numbers, now I didn't think these numbers were overly bad, but I do believe these were slightly below expectations, and we can confirm that, I suppose. I believe they were slightly below expectations. So let's have a look. So consensus revenue, where is it? $15.7 billion. And what I'll do is I'll open up there, 15.7 billion, and it came at 15.6 billion, so slightly below expectations. EBIT, do they have, or NPAT, $3 billion in expected, well, they don't have profit there. Anyway, so I do believe the numbers were just slightly below expectations. Now, some of these numbers were pretty good. So growth in profit of 17%. Now, the growth in revenue, probably not as much as you watch or see, up 5%, so an increase in margins. Cash flow from operations up 29%, free cash flow up 58%. So I thought the numbers weren't overly bad. In fact, I wouldn't say overly bad. Now, the second thing I noticed was major strategic initiatives to transform CSL. Okay, so there's now questions about what the management is going to do and how successful they are in transforming the company. And of course, the second thing I really saw in that section was the intention to demerge CSL Securities. This is another word where there's no U after the Q. So I don't even know how to pronounce it. Anyway, this is I believe this Securities is the vaccination arm of the company as a substantial ASX listed entity in financial year 26. I just don't know about that. I just don't know about that. I'll just trust management, which may be a bad thing to do, but obviously they have their reasons. I'm not sure. See, if this does go through, and because I'm a shareholder and it goes through, would I keep my holding in CSL Securities? I don't know, because the rest of the company I do prefer. Anyway, they also mentioned a new share buyback. which I think might be a good thing because I do think the company's valuation is at the low end and there's probably value, but I'd probably like to see a little bit of growth coming back. And when I say growth, I'm talking about revenue growth. And there's a chance that this company may no longer satisfy my high quality filter. There's a chance. I don't think we'll know right now. I doubt it because I don't think the numbers would be in fiscal AI just yet. That's way too quick. And the reason I say that, revenue growth at 11.2% over the last 5 years. So that might actually go below 10%. And let's just have a look. Yeah, the numbers aren't in yet, which is no surprise. Okay, so numbers slightly below expectations. I also believe that they definitely released some expectations for, and I forget where this was. Here it is. Outlook and Financial 26 in section 5. I won't go through everything else. Share buyback reintroduced, section 5. Intention to merge Securus. They probably mentioned why. There it is, rationale behind it. And if you go through the rationale, anyway. So, it's just buzzwords and stuff like that. Where is it? Here it is, Outlook and Financial 26 guidance. So on the right-hand side, we have the Financial 26 guidance, revenue growth between 4 to 5% constant currency. It's like, and patter growth between 7 and 10%. Yeah. And I have a feeling, and the reason I have a feeling is I think I read this, that this particular Financial 26 guidance was below expectations as well. And we can confirm that, I think. Maybe I read this in Capital Brief. I don't know. And I don't know where I read this. Shed 10% on weak bearing results, transformation plans. Okay, so we have analysis words here. So Craig Wong-Pan from RBC said the full-year revenue and underlying earnings were slight misses. I've already mentioned that, to consensus, while net profit was in line with expectations and at the top end of management's guidance range. Okay, subsidiary bearing missed market estimates, okay, while the group's smaller business Securus and 5-4 beat expectations. There you go. Okay, and also we expect a weakness in CSL bearing, lower than expected financial year 26 guidance, and transformational initiatives, which create somewhat of a messy result to weigh on the stock's performance today. I sort of agree with that. I didn't really know that the weakness in CSL bearing, but the lower than expected financial year 26, I have read that somewhere. I did read that somewhere. I'm not sure where. It wasn't this one because this is the first time I've read it. And also, yeah, transformation. Whenever a company goes through transformation, it does actually increase the risk. And the market doesn't like risk. So I definitely can understand why the share price is down 16 or 17%. But it could be leading to an opportunity to buy this quality company at much better valuations. Okay, now onto the chart for CSL. And the daily chart's going to look pretty ugly. We'll just have a look at that in a second. Here it is. So, in fact, the share price has dropped below. I've got a little support level at about 230 or just above 230. So, share price has dropped below that. And back in April, we saw a lot of support at that level. A lot of buying came in at that level. And it looked like the share price was trying to break out and maybe move back towards $300. So, today has put an end to that positive momentum. And if we go all the way back, the last time the share price was this low at $226, we have to go all the way back to 2019, August 2019, when the share price was in a long-term uptrend. That's the last time share price was this low. And the more the share price falls, because this company is still growing. This company is still growing, mind you. The company is still growing. And the more the share price drops, the better this one looks. But the question becomes, how low can the share price drop? Now, if you have a look at my quality, where is it? We have to look at the weekly chart and the 200-week moving average. If we have a look at where the share price is compared to the 200-week moving average, now it fell or hit or bounced off that particular moving average back in February 2022. And that was the first time it hit that level since 2011, when the share price went sideways for about 5 years. So that could have been perceived as good buying. But the share price has really struggled since then. And funny enough, this is the first time I've noticed it. Share price has sort of has moved to the 200-week moving average in the last few weeks and has had a lot of trouble getting above it. So the 200-week moving average has been acting as resistance in the last month and a bit. So the chart is not looking as good. But if you do believe this is a high-quality company, has a chance to become significantly bigger in the next 10, 20 years, now could be a good time to add to your position. Okay, so that's CSL, stock of the day. Now onto the chart of the day, which is Judo Capital. In fact, they also released results today. Share price popped up about 6 or 7% and is now only up 1.43%. Yeah, so it was up at, it was almost up 10% at the high of the day. So close at $7.75, 17 plus $1.75 is $1.92. High of the day was $1.92. Yeah, it was up 10% at the high of the day. We'll say 9%. But so we have seen a little bit of selling coming in. I thought these results were pretty good and definitely could understand why the share price rallied. But when you do see selling coming in, that can be a little bit of a concern that maybe some analysis sees something more negative. Now, the reason this is the chart of the day is simply because there was a bit of pressure on the share price at the start of the year, and looked like the sentiment was starting to shift. We had a moving average crossover. Share price was at a 4-month high, and I thought this chart was starting to look interesting. And I thought maybe today's results would confirm the positive sentiment behind this company. But we have seen a little bit of selling. Now, why has there been a little bit of selling? Is it just those who bought at high prices within the last between October and March? Is that all it is? It's just a little bit of resistance. The volume hasn't been massive today, so I would prefer higher volume. And that could be all it is, a little bit of resistance because of shareholders getting out who bought higher levels not that long ago. And if we had more enthusiasm of the buyers, and that would be probably seen in the volume, then the share price might have closed at the high of the day, up 10% or so, but it's not to be. Okay, so that's all I have for today's ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.